Hello everyone, welcome back to Kavita Rabindranath's Accounts is Easy, one more video on trial balance. And today, before going to the sum, let us understand a few very important concepts. These concepts will, help you understand how we arrive at the correct profit and profit calculation. A lot of thundering going on. A lot of importance is given to profit calculation because profit should be correctly calculated for a particular year, right? Because that is the objective of conducting any business activity. Therefore, there should be no errors in finding out profit. Now, this concept will also help you in final accounts, this chapter. Let us see the first one, adjusted purchases. Okay, we are making some changes to purchases. Opening stock, meaning the stock at the beginning of the year on 1st April, that we are adding to net purchases. Here, understand that net purchases is equal to the total purchase minus purchase return. Alright? Whatever goods we have returned, we subtract because that is no more a cost to us, right? That brings down the total amount of purchase. Opening stock plus purchase, meaning what? What are we trying to do here? We are just finding out how much stock do I have which I can sell during the year. Last year's stock carried forward here, opening stock that we have, plus whatever we have purchased or manufactured this year will be there. So this is the total amount of stock that I had with me that I could have sold, but I could not sell everything. Correct? I could not sell the leftover stock. Whatever is left with me, I could not sell. That is called closing stock. Year-end stock on 31st March. That is called closing stock at the end of the year. Now we are subtracting that from whatever stock we had initially. Right? Throughout the year, whatever we have, usse closing stock minus kar de rahe hain. Kyun? We are trying to find out how much is the actual worth of goods that we could sell during the year. Okay, that is called adjusted purchases, meaning what? We are adjusting purchases with the opening and closing stock. Correct? Because we need here, why are we doing this also? We need to match the income of one year with the expense of another year. We have already done that in our adjusting journal entries. Yes. So here our principle is to find out the correct profit. So income minus expenditure will give you profit. Whatever goods I am selling, I have purchased it or manufactured it at a cost, right? Now that sales income is my income, and from that I am subtracting the cost of the goods that I have sold. That is how I should get my profit. Yes, other incomes, other expenses I am just keeping aside for the time being. So this is how we get the gross profit. Ideally we call it the gross profit because I have not subtracted all of the remaining expenses from this. So this is the gross level profit, basic. Just like you calculated profit in class 7 and 8, like in profit and loss chapter in maths. You had profit and loss chapter, SP minus CP is profit, CP minus SP is loss. That level of profit we are talking. Okay. So this is the formula for adjusted purchases. We'll come to what effect it has on trial balance later on. First, to understand what is this. Cost of goods sold. Number 2. Cost of goods sold. See, apart from this is at the purchase price. Apart from this, we have also spent a certain basic, on basic expenses which are like very much direct to the costing of the goods. So here there is just one difference between adjusted purchases and cost of goods sold, that we are also adding direct expenses here. Direct expenses, I will give you a few examples so that it is very clear. Carriage inward, meaning the carriage transportation cost that I have paid on getting the goods into my premises. Without that I will not be able to sell. So this is a direct cost to me. I have to incur that should be added to the cost of the goods, and it is very clear that it has to be spent on the goods that we are purchasing. So it's direct connection, it's not an indirect cost. Then we have wages which are related to manufacturing of goods, right? Without spending on wages and any other factory related expenses, okay? All factory related expenses, because factory is the place where we manufacture goods. So that is, basic. Without spending on all this, I will not be able to get the goods ready for sale, right? Therefore, cost of goods sold should include all direct expenses like carriage inward, wages, factory related expenses, any import duties that you have paid, custom duties, royalties that you have paid. All this will be added. Alright. So this will give me cost of goods sold. Of course, we are subtracting closing stock. Did we sell closing stock? No, that is why it is still there with me, right? Closing stock is an asset. Remember that. Why is it an asset? Something I have spent on and I have purchased and acquired or manufactured, and which I will sell in the next year. So next year it will help me earn income. Correct? So this at the end of the year, it is an asset to a current asset. Okay? Which will be converted into cash in the immediate future. So closing stock is an asset. Cost of goods sold is an expense for the firm. Aren't we talking about all expenses? Opening stock is like expense 1. We had discussed in the previous video that opening stock is what? Something you spent on. Last year you purchased, fine. But last year you could not sell, so this year you are selling, and going by this formula or this principle, we need to match the income. We will be selling this year. So we will compare and put it as an expense here, element of expense here, and subtract from my sales income. Correct? I'll give you a very small example. Suppose sales is 50,000. Sales value. And opening stock 5,000. Purchases 30,000. Now if I ask you to calculate profit, yes, sales this much, purchase this much. Suppose you do this. 50,000 minus 30,000. Suppose you do not take any count of opening stock. So 20,000 is my profit as per you. But here, did I sell only goods worth this much and get this much revenue? Or did I sell this together, then I could, get this sale? You obviously would have sold this opening stock also. Yes, this year. Therefore, what was the cost of the goods that you sold? 35,000. That you should subtract from at what price you could sell those goods. So basically, your profit is not 20,000, it is 15,000. Goods kitne ka becha? 35,000. Compare that with 50. You did not sell goods worth 30 at 50. You sold goods worth 35 at 50. Okay. Therefore, it is very important to add this to purchase expense. This is an expense of this year. Okay. Opening stock is an expense of this year. This also. Direct expense also. ये सारा expense इस साल का है, लेकिन closing stock इस साल का expense नहीं है, because obviously I cannot match this with 50,000. Suppose here I also give you closing stock is 2,000. ठीक है? Sales 50, opening stock plus purchase here 5 and 30, 35, and closing stock is 2,000. Meaning, did you sell goods worth 35,000? No. You sold goods worth how much? 33,000, because 2,000 worth of goods is still lying with you as stock, isn't it? So I'll subtract this from here, and I should subtract only 33,000 from it. Therefore, profit is 17,000, not 50. Okay? So closing stock is an asset, not an expense of this year, because I am not selling those goods. So how can I consider this an expense of this year? पैसा दे दिए हैं. But this could not be converted into revenue. So I cannot match it with this year's sales. It's unfair, isn't it? Therefore, I subtract closing stock from opening stock and purchase taken together. Therefore, this formula is very, very important. Cost of goods sold. You should be learning it by heart. Opening stock plus net purchase. Net is important because it's not gross purchase. Purchase minus return. You can also write like that. Opening stock plus purchase minus purchase return. That also is fine. It means net purchases. Plus direct expenses. All the direct expenses which go into manufacturing of the product. Acquiring and manufacturing. And of course, we are not taking any selling expense here. Okay, no selling expense is considered as direct expense because selling is afterwards, distribution expense, isn't it? We are trying to find out how much did we spend to get the goods ready for sale, ready to be sold. उसके बाद का सब indirect expense, okay? And then from there we minus closing stock. So is this clear? Absolutely, yeah. One more thing is sometimes you will be given closing stock outside the trial balance, and you will also be given both the values. Cost of the stock, suppose cost is 30,000 and the market value is also given of stock, meaning at what price you are expecting that stock to be sold in the next year. So that is 35,000. Suppose this is given in the sum. So at what price, 30 or 35, will you value your closing stock? Let me tell you here, closing stock is physically counted at the end of the year and valued. Okay. Now, will I value it at cost or market value? Of course, market value is more, meaning my stock, although I have spent only 30, might fetch me 35, and that word might, catches the wits of the accountant. Might मतलब जो probable future profit है, अभी sure नहीं है, we will not count it, never, because we follow the conservative principle. Conservatism, the principle of conservatism, meaning कोई बात नहीं, 35 में बिकेगा तो बिकेगा later on, but right now I will value at this. So I will value at cost or market price, whichever is less. That is my principle. Whichever is less, I value my asset as that, because if I get to sell it at a higher price, fine, that's a gain for us. But what if I do not? Because nothing is sure. The market price might just dip afterwards. So it's a profit which is not sure, we do not count it. Okay. So these are the very important principles. And now that we'll take a sum and then see the effect of this on trial balance. Ready? Alright, so you had a look at the sum. What is the sum saying? There are certain errors in the trial balance and therefore you have to correctly draft it. Alright. Now the date is not given of the trial balance, neither the name of the business, so we have just left it like that. Trial balance as at. Go by the format. You have been given cost of goods sold. Cost of goods sold. What is it for the business? An expense, I told you. So cost of goods sold, whenever it is given, let us put it. Cost of goods sold. An expense, so it should go to 33,60,000 debit column. Alright. Now when you talk about this cost of goods sold, as we have just seen in the formula, if you've noted it down, it includes opening stock plus net purchases, purchase minus returns, plus direct expenses and less closing stock. Meaning all of this has been done already and therefore we have got cost of goods sold. Opening stock is added to purchases and closing stock has been subtracted. Also direct expenses have been added. So now you have to be very careful. Next is sales. Sales is 4 lakhs. We put it in the credit side because it is an income. Correct. Premises and fixtures. Both are what type of assets? Fixed asset. Correct. Now premises is given 7 lakhs in debit column, but fixtures is given in the credit column. You have to bring it to the debit column. Both are assets. Okay? Both are fixed assets. So therefore, debit column, all assets and expenses. Again, I am reiterating the rule. To understand why a particular item should come in a debit or credit, you need to know. If it is an asset or expense, it will have a debit balance or debit column. If it is a liability or income, credit column. Good. Debtors, sundry debtors and sundry creditors. Debtors is 5,10,000. Creditors 2,80,000. So all this is pretty good. Opening stock is 5,60,000. Opening stock, we just talk about opening stock. Kidhar tha? Yahan. Have we not added in cost of goods sold already opening stock? Then this is an expense I am showing, including opening stock. Will I again show as an expense here? 10. I should not, isn't it? Because यहाँ पे already opening stock add कर चुके cost of goods sold में. Why will we count that same expense in two places? Isn't it wrong? Yes. If we take this in both the places, it will be wrong because it will be, having a wrong effect on my profit. I am taking an expense 2 times. Why should I take it? It's the same thing. So since we have included here, we will not take opening stock. Please make a note of it. Okay, wherever you are writing. Then, opening stock will not be. What about closing stock in the same sense? Closing stock also has been subtracted, so we should not take. It has been subtracted, not added. Okay? Cost of goods sold is an expense to me. And I have got that expense after I have subtracted closing stock from purchase plus opening stock plus direct expenses. Usse minus ho gaya na? So obviously, cost of goods sold does not include any closing stock. Does it include? No. Closing stock is an asset too. So I should show here closing stock. As cost of goods sold is given. Meaning closing stock has been subtracted from this. So I am not counting it twice. Okay. This is an expense. This is an asset to me. Closing stock. Closing stock is an asset to me and the value is 4,70,000. Therefore, it should be on the debit column, not in the credit column. So, is this clear, children? Whenever cost of goods sold is given, do not show again opening stock or purchases or any direct expense. Do not. Otherwise, it will be double counting. That's the expense part. But closing stock has been subtracted. We ideally do not take closing stock because it is not adjusted. But here it is already subtracted. So we will take closing stock here as an asset. Here. Expenses. Now expenses I don't know. It's direct or indirect. So if nothing is given, please again make a note of it. Nothing is given, we will not assume it's direct. If it is given clearly direct expenses, then I would not have taken because it is added here. But this is maybe other indirect expenses which is 2,20,000. So I will very much take here. Okay, expenses. This is you are assuming to be indirect. Okay, these notes you don't have to write. This is just for your understanding that I am writing. Okay, capital cash. Capital 8 lakhs always on the credit side. Yeah, it's a liability. Cash is 10,000. Obviously an asset to me. PNB overdraft. PNB is Punjab National Bank. Even if you did not know, it's an overdraft. Overdraft meaning a liability. Yes, we have taken out more than we have deposited. So that should be on the credit side. Alright. So PNB overdraft is on the credit side because this is a liability. We need to repay that to the bank. So that brings us to the total. We have taken everything else. Nothing left. Yes. So that answer should come to 54 lakhs. We will check that. Clear? Both sides. It should tally like that. So, I hope this sum was simple and you've got hold of the concepts of adjusted purchases, cost of goods sold, valuation of closing stock. And what effect will it have? If cost of goods sold is given, you will not take again in the list of ledger account balances opening stock or purchases or direct expenses. Otherwise, you are counting it twice. Not correct. But you will always take closing stock when cost of goods sold is given. One more thing to be noted is closing stock will never appear in trial balance if cost of goods sold or adjusted purchase is not given. If only purchases were given, suppose only purchases are given and then closing stock is also given to you. Will you show both? You will not, because purchases से ही तो closing stock बच गया ना. So purchases, suppose it was 5 lakhs and closing stock is 5,000. Meaning what? Purchases out of 5 lakhs, 5,000 is left. Closing stock is left. You have not yet adjusted that. So it is still showing in the books like this, right? Therefore, if I take both, I am showing this as an expense and this as an asset. But whereas this is coming from here only. So if at all this is subtracted, expense is 45,000. Oh sorry, 4,95,000. 5 lakhs, no? Expense will be 4,95,000. I subtracted 5,000 from 5 lakhs, and 5,000 you can then show it as an asset. Alright, separate. Because closing stock आया कहाँ से? जो goods purchase किया sell नहीं कर पाया वही बच गया ना? Got it? So this you have to keep in mind. So keep doing more of accounts, lots of accounts, loads of accounts in the simplest of way with me. Thank you so much for watching. Please do like, share and subscribe. Take care.